Chun. I'm assuming that you can hear me and see me. Welcome. I hope everyone's having a great day. I'm Deirdre Boza. I am a technology correspondent for CNBC based in San Francisco, and I am extremely honored to participate in this first edition of Edith Young's brainchild, Wartime Conversations. It is a place where we can talk about all of the disruption that we are seeing, unprecedented in these times. And that said, I know that there are a lot of participants here, so welcome. And we really want this to be a conversation. So there is a chat function, and I will be able to view it as a participant. So I will see your messages. Please feel free to join in, comment, respond to what you're hearing. If you like it, we want to hear from you. If you don't like it, we want to hear from you as well. George and Alfred are pros. So please do participate. And our audience today is made up of founders, CEOs, investors. And so I'm extremely pleased to be joined by two of the best people we could hear from during this time of extreme uncertainty. One, of course, is Alfred Chun. He's the founder, CEO of BEA Systems and Race Capitals. He's been on the front lines of creating and selling his own company, and now he's on the other side getting pitched to. So it will be hugely beneficial to hear from him and what he's seeing in the startup ecosystem right now. We also have George Lee. He is the co-chief information officer at Goldman Sachs. So he's really been tasked, an enormous task. There. Hi, gentlemen. How are you? To finish up, George has been tasked to chart the work from home path for Goldman Sachs' tens of thousands of employees. Now, a quick note for where I am. I said that I was based in San Francisco, but today I'm coming to you from Whistler, BC, Canada, because like some of you out there probably found out, I realized that working from home meant that I could do it from anywhere. And I realized that there's more space in the Great White North than my tiny apartment in San Francisco. So we're lucky to have this, and I can probably guarantee you better from here that my kids won't crash my live shot. My two young kids won't crash my live shot. Alfred, George, what about you? Is there anything, any cats, dogs, children we should be aware of? I see that you guys are both coming from home.
Well, I think this is a whole new time for us. Deidre, I think we just heard the news this morning that well, originally, I think we heard Google was going to have the employees work from home until June. And then now Facebook will originally have the employee work from home until the end of the year. And now they have changed that they will be able to work from home forever. Jack Dorsey from Twitter was the first one that said everybody can work from home for the rest of the year. And a lot of other companies like Coinbase, Spotify all follow suit. So I think we're really seeing a major demarcation of what is the world going to look like post COVID-19, and after we flatten out the curve, how the world's going to be shaping and how people are going to be working and interacting in a decade to come.
It sort of feels like that moment we were in just a few months ago when you saw the tech companies decide to bring their employees home in the first place, right? And then everyone started to get on board, and soon the question was, who's not working from home? So George, from your perspective though, I know Goldman Sachs is becoming more and more like a technology company, but there's certainly different restrictions that you have to think of, and people have to work from an office where it's more secure, where potentially you have a freer exchange of ideas. So tell us a little bit about the changes that you have really navigated for Goldman Sachs, and how many employees now? Almost 40,000?
Yeah, good. Well, first of all, thank you for having me. It's really a pleasure. And, per Alfred's comments, I applaud these companies for demonstrating lots of flexibility about work from home. I have to say the very idea of being in this Zoom frame in perpetuity is a little frightening for me personally. So it'll be interesting to see how it plays out. Hopefully we'll have some sort of hybrid scenario. So yeah, at Goldman Sachs, we've got 35,000 some odd employees. Remarkably, we were able to virtualize more than 98% of those people. So we have a very vestigial group of people that are in the office around the world for very essential services, but frankly, a much greater percentage able to conduct very complex tasks like trading and things like that from distance. And it's been a remarkable experience to watch it unfold. We were a little bit fortunate because as a global company, we saw this emerging in China. We had to respond in Hong Kong and in Singapore. And so some of the business continuity practices we are able to kind of refine there and then bring to Europe and the US as time went on.
So I want to get both of your opinions on this. And Alfred, from your point of view, has the productivity of workers, of companies to be able to make this massive shift, has that surprised you? Have you seen that across the board in specific industries?
I think the surprising part really is the tooling part of it, because I think we never have designed a perfect set of tools for us to be able to just go work from home. I think we are all astonished that there were software like Zoom that we're using now, that Eric and his team has done such a good job that allowed itself to scale from 10 million monthly active users to over 300 million overnight. I mean, that's just a credit to that team and what they have done and allow us to do this. I think on a productivity level, I have heard from a lot of CEOs, actually, the productivity has actually improved. The employees don't have to waste time in their commute. They were able to focus at a desk. Actually, from most of the people I've talked to, they thought the employee in general are working too much, because now it's very difficult to determine when do they start, when do they end. And also they got a lot of disruption because it's so easy now to be in a meeting. So a lot of engineers are complaining that they get disrupted too much. So I think we're still trying to find a way in terms of the whole working from home, how we really should be doing this properly. And that is to be worked out. But I think this is a trend that's not going to stop. And I think we're just going to continue to be much better at this. And it's great. I mean, it's allowed our world to be so much more decentralized and leverage workforce we normally couldn't tap into.
George, what percentage of Goldman Sachs is at home right now?
So yeah, just over 98%. So the vast majority. And on the productivity front, as it relates to our engineers, it's amazing. We have 10,000 engineers at Goldman. So basically more than one quarter of our employees are engineers. And we get to track their productivity pretty closely in the form of code commits to Gits and Jira ticket resolution, et cetera. And we saw an immediate decline around the time of the dislocation. But since that time, productivity has been at higher rates. And I think our concerns are a lot along the lines of what Alfred mentioned, which is, the sort of cognitive relief that might come from overworking and working at odd hours. And so we're almost more concerned about making sure that employees have the proper balance in their lives in this unusual new format. And as we look across the rest of our businesses, investment banking, sales and trading, et cetera, we also see that productivity measured by things like calling velocity and client interactions and so forth are up a lot. And it is sort of a fascinating thought experiment. One area in engineering, we see it in particular, is we have 3,500 engineers in Bengaluru, India. And just the productivity gain from those folks not having to navigate their commutes every day is adding hours to their productive work time. So it's really sort of it'd be fascinating to see how this all plays out over time, as Alfred has said.
Mm-hmm. Now, Alfred mentioned a few of the companies we've heard from in recent weeks. It started with Jack Dorsey and Twitter and Square, Shopify, and Facebook were today. So it's quickly happening. George, do you foresee Goldman Sachs following a similar route and allowing employees to work from home permanently, since you are seeing productivity gains and it is seeming to work out so well, even though we are in the early stages?
Yeah, look, I think it's early to say. I would say a couple things. One is, we're developing a very thoughtful, deliberate, people-first return to office strategy to, implement when those conditions mandate that. At the same time, I'd like to believe that one of the positive artifacts of this crisis will be, more flexibility for employees to, locate themselves more conveniently, be a little bit more flexible and agile about the amount of time they spend in offices, which offices they work from. So I think that book has yet to be written, but I think we're trying to think very broadly about both, facilitating a return to office, but trying to look through a deeper lens of what the world will look like in the years to come.
Now, Alfred, I want to go back to the beginning a little bit, when we started to understand, as a country, what COVID would mean, how it would disrupt absolutely everything. Some people were earlier than others, but I still remember the moment, because I jumped on TV with it when Sequoia put out their letter, now a little bit famous, the Black Swan letter, telling their founders of their portfolio companies that they need to re-examine every assumption they had about their business, doing things like preserve cash. And I think at the time, one of the partners said that they didn't think any would go under, but they wanted them to be prepared. How does that letter, those warnings, look now a few months into this?
I totally agree with what Sequoia said in that coronavirus clearly is a black swan. For the coronavirus clearly is the black swan event. But it's not just for 2020. I think this is at least going to be for the decade, or it could be going on forever, right? Because this is going to be so impactful, and we're going to be, like, your children's going to be growing up remembering that this is an impactful event. They went through a pandemic, and life's going to change. And one quote I really like in the article, it quoted Darwin and said, those who survive are not the strongest or the most intelligent, but really are the most adaptable to change. I think that's really is going to be the super key thing. But the crisis kind of created an opportunity for our generation. And it's also really a test of true leadership. So the really good leaders, they're realistic, they're very decisive, they immediately take in a contingency plan, take very bold action, and set directions beyond. Actually, I was in a board meeting yesterday with one of the companies I'm involved with called HackerRank. And the CEO within the first days immediately jumped on creating a plan of what they wanted the employees to interact, where they should be working, and send everybody home, and have a plan for the business, how that may be affecting them. They're actually in the hiring business. And I think that's super critical. I think, and now, at Raise Capital, at our firm, we think the world is going to change forever, and every business is going to need a pivot. And it's really the time to build, and we have to start looking into the 10 years. And I think what that article from Sequoia mentioned is that world that we're leading into 10 years from now, 20 years from now. And that's really now what we have to focus on, is what that world is and what we need to pivot into.
And George, so thinking about those opportunities, and you're really in the perfect position because you are the co-chief information officer at a huge company. What tools were you pleasantly surprised by, or maybe you were already using, but have been so critical in transferring 98% of your workforce to a work from home environment? And what's missing? I'm very aware that we have lots of entrepreneurs watching right now. Where are places that still need to sort of come up to snuff here?
Yep, great question. So just a couple quick thoughts, and I'm happy to pursue this more. But first of all, we benefited a lot from having a very mature VDI infrastructure, which we call NDS, that allows any person at Goldman Sachs to replicate their entire desktop environment wherever they are. Anywhere inside the Goldman Sachs system, on their desktop at home, on their laptop, increasingly on their phone and iPad. And so that turned out to be, really, really helpful, so that, even though we had to make some very quick decisions and transition quickly, folks could have a simulacrum of their working environment, right at their fingertips. So that was hugely helpful and continues to be important. Though I would say that this, obviously the load that was put across that system, we were well prepared for, but I think it spurred a lot of thinking on our end about what's the future and next generations of our VDI infrastructure. And I think that will be an opportunity set across the valley and among entrepreneurs to think through. Obviously, Zoom and video conferencing has been a big part of the success, and we found that actually to be one of the things that's allowed us to be more productive. I mean, the opportunity to organize and implement discussions like this with clients on a moment's notice versus waiting until George Lee is in London next time, or we can have a 3-hour dinner. You can just spin up a 1-hour call and be very effective. So we've seen it as be a great, way to knit the team together and be engaged, but also a great way to engage clients. So that's been really important. We've been thrilled to be in a position to deploy that well and at scale. I think the other big two areas of opportunity that I see that are interesting is, I was thinking, the other thing that was complicated about our virtualization is it came amid a very, very sharp market correction where market volume spiked anywhere between 2 and 20 times, depending on the market space. And, that load of activity at a time where we were relocating ourselves, again, it's really kind of a miraculous and remarkable thing we're able to successfully do that. But I think it pointed out the need across our industry and probably across industries for more digital workflow, more automation. And I continue to believe that these events lay bare the fact that there are still too many manual analog workflows in businesses and in ecosystems and industries. And so I think will cause us to redouble our commitment to continuing digitization and automation there. Then the other thing I think that's fascinating is operating at distance and having the inability to run into someone in the hallway or run into someone's office and ask about a question or a problem. We've developed a lot more instrumentation and telemetry about our systems as a crisis being the mother of invention here. So we've created some really nice dashboards and instrumentation that I think are terrific. And to the extent we continue to operate in a more distributed manner, in business, I think people that enable and provide that will have a lot of runway in front of them.
That's a great answer. And it also kind of tells us about the stakes at Goldman Sachs too, about this, rushing to work from home in the middle of, market craziness. So that's really fascinating. I will say as myself as well, it's been remarkable to see in my industry, media, broadcast television, what we've been able to do. I'm looking at my podcaster right here. They were deployed to all of the on-air reporters and anchors, and never did I think that I could broadcast, from home in my sweatpants. But you also bring up a good point, George, in that flow of ideas. Sometimes things come when you're crossing a colleague in the hall, you're able to toss things around. I also find that there hasn't been a really good solution for that yet. And Alfred, I wonder from you too, when you look at startups and you meet with entrepreneurs, can Zoom really substitute the face-to-face time that you can get when you're constantly doing in a non-pandemic world?
So Deidre, actually, I want to clarify one thing first. I actually, obviously, is a big believer of very decentralized company. This model, it drives us to allow workforce to be everywhere and further leverage skills that we would not be able to use before. And it's kind of binary because either the company fully adopt the ability to allow people to be everywhere, or they have to be centralized in the place. Now we're forced to go into the whole new world that we're decentralized. And from a tooling perspective, I think we are very early from that perspective. Zoom was designed to be a business tool for doing video conferencing. It was never meant to design for consumer or students, but it was able to quickly adapt it to use for all that because we don't have anything else. So we have to use all these video conferencing tools to substitute for what we no longer can see somebody in person. So I think we have a long way to go. I use a typical example. We can easily get into, the engineers do, in a complete rat hole with Slack. We're sending message back and forth, and we just it become kind of like a contest on who's going to be one up on what they're going to win on a technological subject. Well, normally what had happened in an office, you tap somebody on the shoulder and have a short discussion with them. So perfecting that to be able to do a very short video call that only lasts for maybe seconds or minutes is going to be super critical. I mean, those features exist, but they're not smoothly implemented yet. Those are things that we have to work on. I also believe that not everyone is never going to socialize again. Office will be back, I think, just in a very different format, likely to be more plug and play. We will be gathering in events for a very specific purpose. So it's going to be different, and it's going to be used radically and formatted in a way that we don't think of today. I'm pretty sure about one thing. A decade from now, we're going to look back and we're all going to say, oh my God, office space used to be a thing. And what had happened? So I'm pretty sure that's going to happen. Yeah.
And certainly we're starting to discuss that on CNBC. It takes up a lot of our time. What does that mean for commercial real estate? What does that mean for cities, metropolis areas like San Francisco, where people are paying very, very high rent? I spoke to a founder the other day who said he may be giving up his top floor prime real estate, commercial real estate, because he just doesn't need it anymore. We also have a question that I want to get to because I think it's a good one. I'm just opening it up right now. With the move, this is from Brad, with the move to remote working, do you think that will increase the vulnerability of the enterprise to cyber hackers? Do you think that will hasten the adoption of blockchain distributed ledger tech? And I think that's a great question. George, maybe I can get you to start on that.
Sure. I mentioned that we have a very mature VDI infrastructure. That's helped us in that domain in the sense that it is very encapsulated, and we assume that you're working from a compromised device, frankly. So our security model was, again, mature and well fitted for this. That having been said, to the extent things play out a little bit along the lines that Alfred described, where there's more flexibility, more distributed space, little places where people spin up in certain geographies, more people working from home, I think there will need to be a real evolution in security, compliance, and frankly, surveillance technologies in certain cases that allow us to make sure we're continuing to be as secure as you believe you can be, and when you have physical proximity to one another. So, I think it's a really good area. And, I would just echo what Alfred said is, this is obviously it's a terrible and shocking and very difficult time. And yet Alfred and I have lived to a few of these crises together, actually, and none of this scale or import, but they're always a catalyst for change and new ways of thinking and new directions of application development. And, I actually, in some ways, I really look forward to what this spawns in terms of the kind of technology and tooling that emerges from this.
And Alfred, have you seen changes? It's only been a few short months, but has your inbox been filled with more cybersecurity, blockchain pitches?
We actually seen a lot. We're inundated with, and which is really a blessing of what we expected. I've been through two major crises: the 2000 .com bust and then the 2008 financial crisis. Both of those, for the business I was in, we were impacted, greatly. But an amazing thing happened. Every time when there's a crisis that happened, generally actually within months of the peak of the crisis or the V of the stock market, the greatest company emerged. And they emerged because these companies were specifically designed for the next decade to come. Like after the post.com crisis, we saw all the e-commerce company came about. So we have Netflix, we have Amazon. Those all emerged and become big post the internet crisis. So that rush of capital to make the .com bubble happen became the catalyst, allowing us post-bubble to fund really great company that learned from the lesson before and then impact our life forever. I mean, we can't even imagine a life without those companies. We would have survived this pandemic while staying at home. And then similarly for 2008, I think we see all the apps and the mobile and social all happen after that.
Alfred, I wonder if that could possibly be different this time around. I spend a lot of my time looking at antitrust and how the big tech giants are only getting bigger. And you've even got Google, pushing its video software. You've got Teams coming for Slack. Are you seeing the same thing as you have in previous crises, startup community being able to gain a foothold when it feels like Amazon and Google and Facebook and Apple, they're just trying to do everything and eat everyone's lunch?
Well, when I first started BEA, our sole competitor was IBM, and they own every customer. Every single customer I needed, I have to take it away from them. And then it came Microsoft. And these were giants. I mean, they are the most formidable, the most admired company in the world. And we were able to build a very thriving, fast-growing, $2 billion, $1.6 billion a year in revenue business that were generating a lot of cash and basically change the world. So I have every bit of confidence that, because there's so much we need to do, the stuff that we talked about earlier, because we used to have security of the confinement of an office physically. Now we no longer have that. So everybody's at home. So we have to rethink what does security really means? What does compliance really means, right? Because we don't have those constraints that we can have a three-way, four-way call. Now we have to do it electronically. And I'm a client of Goldman. I'm just totally amazed how much they have adapted in such a short order that all of that got thrown out the window. You no longer have to do any paper, none of that. So I think if an old firm, a 150-year-old firm with that kind of legacy can change that quickly. Mm-hmm. I mean, you can only imagine what stock we need to build in technology that larger company really cannot do. Now, I'm also not worried about the capital market because the market loves the new innovation and new opportunity to be able to have very high return. And I think this really is the time. We're going to see the biggest return from this time around of the technology innovation than the two previous. If we think software had ate the world in the past, we have never seen anything yet. Anything that hasn't been automated is really going to be automated this time. It's going to be huge.
Right, and you're saying there's certainly room for new entrants. George, how much of your time is spent looking for the next technologies? Do you go outside of the Microsofts and IBMs, to look for them? And Goldman has been quite acquisitive in the past, especially when I think about sectors like fintech, right? To be able to do more online banking, robo-trading, et cetera, et cetera. How is that viewed at Goldman right now? And again, like, how much time do you spend looking at new technologies and new companies?
Yep. Yeah, it's great question. First of all, I just wanted to agree with something Alfred said, which is, look, the companies, the biggest, most powerful companies today are formidable and phenomenal platforms. At the same time, it's these crises give rise to such a fundamental departure from business as usual that they create new opportunity space for disruptors to come in. So rather than disadvantaging young companies, I think these environments provide really unique opportunity sets. The other observation to make is, having lived through the same crises that Alfred did, it also breeds an era of startups that are very scrappy, very frugal, and very creative, and do more with less. And that seems to be a real accelerant to innovation, because it's kind of a funny thing. So I'll put a pin in that and talk about Goldman for a second. Yeah, look, we are, it's critical for us, given the scale and ambition of our transformation agenda and all the new things that we want to do as a firm, largely enabled by technology, we have to keep a very close eye on new developments, partner with young companies, embrace young companies, experiment a bit. So, we're definitely trying to do that more and more. We're an active investor in the fintech space through various different pockets of capital at the firm. That's a great way of exposing us to exciting companies, finding a way to partner with them. That works both ways. Sometimes we discover companies as investors that then end up being part of our engineering portfolio. Sometimes we have our engineers discover great new technologies that end up being part of our investment portfolio. So it's a really nice, nice circle there. And I spend a lot of time trying to figure out what's going to give us differential advantage in the future.
So it kind of brings me to a broader question. What should companies very, very broadly be doing right now? Conserving cash, because we don't know how long this crisis is going to last and there are just so many uncertainties? Or should they be taking advantage right now, perhaps raising money if you're Stuart Butterfield at Slack, so that you can be opportunistic? What do you advise companies, and what's the differentiator here? Alfred, maybe you can start.
I have to be honest. I think I'm somewhat glad that we're seeing a pin kind of poked into the bubble and it's leaking some air out, which will allow valuation to come down a bit and allow some of the better companies to really rethink what they are here about. They're here really is, I have a mentor, Bill Janeway from Warburg Pincus, and Bill has always said to me, Alfred, cash flow positiveness is shareholder happiness. So you really have to think about, what are we here for? We're here to be able to have a very profitable business that is self-sustainable. So every founder should really be thinking about cash conservation and cash generation in every way, shape, or form. And this is, the company that I deal with are in software. So it should be extraordinarily capital efficient, especially in today's world. We have open source, we have the cloud. So, the rest of it is really just sloppiness. And when we have too much capital, we do silly things. This is a time to re-snap. And I think it's much better for us. We can see the good companies, the companies that really have it all together, versus the company that are still in a waste mode. The company really have to get their act together on cash. They really do.
Well, let me just take the other side of this then, George. To be truly, truly disruptive, does it need to be growth at all costs? Or would you agree with Alfred in that there needs to be a path of profitability?
Yeah, look, I think a lot of it has to do with what are the microeconomics of the sector you're going after, how much incumbency is there, what do you have to do to, if you're creating a new market space, you may not have to spend as competitively on sales and marketing than you might if you're like Alfred did, go disrupt IBM and Microsoft, which was a tall order that they completed incredibly well. So I think it's very situation specific. By and large, though, a scarcity of capital tends to breed more creativity, more, wisdom in terms of capital allocation and, generally better outcomes. But look, there's a time and place for pressing the accelerator, deploying capital, finding the opening and trying to get through the line to get downfield. So, I just think it's both market space specific and stage of market development specific.
Now, I want to get to a few more audience questions. And by the way, please keep them coming. They're really great ones. I have one. I can't see who it's from right now, but let me ask it. How do we retain or create those less tangible, non-digital elements of human interaction? And what new opportunities? Let's drill down here. What new opportunities are there? George, maybe we'll start with you and tell me how Goldman Sachs has tried to recreate that.
It's an excellent question, one we spend a lot of time thinking about. And by the way, when the topic of the conversation in Alfred's comments about wartime leadership, I was trying to think what that really means at Goldman Sachs in this moment. And well, it certainly has all the things that Alfred mentioned of fast action, quick decisions, being agile, et cetera. I think the word that came to my mind most is communicativeness or communication. Because what we found, and I think what our leadership is done exceptionally well, is during this period of time of uncertainty, while we're operating at distance, the need for engagement, for communication, for even if it's in digital form, touching and feeling and getting, having interactions is higher than ever. And so it just, that happens in wartime, right? The way to get through the fog of war is to have better communication channels and supply lines. And so I think that we have tried to do that. And so outreach, personal outreach, scale outreach, we record podcasts, we record messages, we have town halls, we have small group messages. I ask my managers to give me lists of junior people in my organization who've been going above and beyond the call of duty, so I can send them personal notes and reach out and make calls. And so I think, to me, the biggest thing that's changed for the positive is, again, because you don't have the water cooler happenstance collision, being very front-footed in communicating and almost to the point of excess.
So Alfred, what opportunities arise from that? What should entrepreneurs be looking at?
Well, the whole subject of workplace automation, really, we have not done a whole lot. I mean, we have some collaboration software that's pretty popular in the marketplace. Some of these video software is available. But overall, in terms of workforce process automation and retention of knowledge, we really have done very little in the technology field. It's something that's always been on my mind, but yet that really is hard to implement unless we have a situation like this. When we have a situation like this, it's really meaningful. And by default, you have readiness to go implement. So I think we're going to see a lot of new technological innovation in the area of this whole work from home automation, and how do we retain knowledge about different employees, what they say, and how do we actually make teamwork, foster teamwork and make that happen. And part of it is not only technology, part of it really is rethinking about how we like to work with each other. So when we actually take time when we go back to somewhat of a normalcy to actually meet and to be in a town hall, to be in a meeting, what we will say and work with them, I'm sure it's going to be very different. We're going to be treasure those times a lot more than we have done in the past.
Yeah. Hey, Deidre, do you mind if I intrude with a question here, thinking about this? I was going through my wartime discussion. It made me think of Alfred and I have worked together. Before I was CIO, I was a banker for 25 years in Silicon Valley, and I had opportunities to work with Alfred. And we lived through securities offerings during very dire market scenarios. We lived through a hostile activism situation that unfolded into a really complicated sale of BEA. And I was always super impressed with Alfred's wartime leadership. And so I know, Alfred, what were some of the tenets or ideas you had in your mind during those settings that might be transportable to today?
Well, I think as leader, things happen to you that is not predictable. So we were in a scenario in 2008 where, like all the other large tech company, we were embroiled in 6 quarters long of a stock option investigation exercise that turned up nothing. But unfortunately, we couldn't report earnings for 6 quarters, so our stock was very depressed. And then Oracle has always really were very fond of the company and wanted the company to be part of Oracle. And they eventually bought the company and been very, very successful with the acquisition and stuff. I'm very happy for him. And he's a really is a great guy to do business with. But in the process, we have Carl Icahn has participated in the stock. He bought over 10%. And this was Carl's very first entree into technology. And obviously, I didn't know how to respond, and I have to learn. And I decided to deal with Carl by Lunch 101. But it's new to Carl, he's not a technologist either. But we end up having a very cordial relationship and worked out exactly what's really best for the shareholders. And time was tough. And by the time that we really have figured out how to work with Carl, Oracle had lost patience and they lobbed at hostile bid, publicly. And that's a whole exercise of its own. Then you have a lot more advisors get involved, and it's different. And eventually we were able to negotiate a price and kind of sell the company to them, I think, for a very fair price. And mostly that happened because, the financial crisis hit and the world was falling apart. And I remember, right in the smack of 2008, we had a large deal. We were all teed up. We have received the order from Bear Stearns, but then literally within the same day that we got the order, they went under. And the next one was Lehman Brothers, and they went under. So as a software company, you know that you're going to have to battle for. We had a lot of cash. The company had over $1.5 billion cash at the time. And look at our comms. Our comms were, NVIDIA was a little smaller than us. Adobe was a little bigger. And these are all incredibly great companies now trading at over $200 billion in market cap. So we will kind of know if BEA will still be around with that large of an install base, what would we be able to do in the marketplace? But as leader, you kind of have to do what you have to do. I wasn't there for myself. I have to think of my shareholders. And if my shareholder have a chance to have $8.6 billion cash, and that's really what they wanted, I have to deliver that to them.
Yeah. And I recall from the IPO, from the earlier things that we did together too, you do an exceptionally good job of managing with the deep sensitivity to people and stakeholders and constituents. And yet you manage to do that while being very rational and unemotional and clinical about decision making. And those things are those are requirements of operating in wartime, and they're super hard to balance. It's always impressive.
I think sorry, Alfred. Well, I was just gonna say, I think also there's this conception that maybe if you have to be a wartime CEO, you don't back down at any cost. You have to constantly fight. But, it sounds to me like there's aspects you bring. Maybe the best wartime CEO is someone who's operated in peacetime too, right? They can see both sides of it.
Deidre, I think this wartime and the peacetime both came from a blog that my friend Horowitz wrote some time back. And I think when Ben wrote the article, I think what he meant was there's a time that the peacetime CEO are there to set processes, delegate their work, and that's really kind of he categorized, which is generally categorized a set of people in that area. And then the wartime CEO that they drill down into all the details and really mend the business very, very tightly. Yeah, I think look at our industry. Our industry is really relatively young. And we have probably the best CEO ever groomed in the world came from technology. And now some of these really, really good CEO has gone from being CEO in our industry, has gone to be CEO of other great industry. John Donahoe used to be CEO of eBay and then was ServiceNow, and now CEO of Nike, right? The biggest brand in the world. So I think people like what these rapidly changing industry and industry that require to constantly innovate and pivot, even though as big as you get, you constantly are pivoting. Look at what Microsoft has done to themselves in the past decade. I think we set almost a gold standard. Company really have to be flexible, and CEO really have to be on their feet all the time. I'm going to guess there's not going to be any peacetime CEO job left in the next decade because of this pandemic. And every CEO will have to transition into a wartime CEO role.
Now, okay, guys, the time has gone so fast. I can't believe that we're already 40 minutes. And so I did want to save a few minutes for the game that I have that you both agreed to. Edith, maybe you could just message me if we're getting a little bit long, please. But it's called Overrated or Underrated. And this is the quarantine edition, okay? So I'm going to say a word or a phrase, and both of you have to say either overrated or underrated. You don't need to explain yourself unless you would like to. Most people get to one where they might want to. George, why don't you answer first, and then we'll go right to Alfred.
Okay.
And audience, please feel free to send me your suggestions. I can't promise that I will ask, but I will see them and I will try if they're appropriate. So let's kick it off. The first one, we'll start with an easy one. George, you start. Work from home.
Underrated. I mean, it's been a revelation to all of us how productive we can be, how much flexibility introduces to your life. And so, again, consistent with Alfred's commentary, I think this is, going to reshape things for many years to come.
Alfred?
Underrated. And finally, everybody decided to do it at the same time. It's not working.
Office space. George?
I think, differently rated. I just think, very unclear, and what is clear is going to be differently formatted and distributed and oriented, but I'm definitely not ready to call it overrated yet.
Alfred?
I am going to call it overrated. And I think because
I like it. Video conferencing, and we will switch this up so that Alfred, you're going to have to think quicker, and George, you'll get a bit of time. But George, video conferencing.
Boy, deeply divided on that. I err on underrated. It's just been remarkable. It allows you to connect with people in a way that even physical, the bounds of physical constraints prohibited. So I think it's awesome. It also has its exhausting dimensions, and so, but underrated.
Extremely underrated.
Okay, let's try this one. I wish Edith could answer this one. Zoom happy hour. George?
A little bit overrated, because I just find it, it's hard to find the right social cueing and the way to have active discussions like we're having here. If multi-threaded for 3 of us works, for 50 of us, it's a little harder. But I love the spirit of it.
I think it's overrated and more work needs to be done in that area.
All right. We're going to switch it around now, okay? So, Alfred, you answer first. Food delivery apps.
Underrated.
George, I know you get gourmet meals every night from your daughter, so.
I do. As I told you earlier, I have 2 college-age daughters, one of whom is an aspiring chef and foodie, and she's taken the quarantine time here to further develop her skills, and she delivers these magnificent meals, often together with signature cocktails at home. So I'm a beneficiary of that. So I've got to say, food delivery overrated for me personally, probably under for the world.
Yeah, now you've got the whole room of participants mad at you for these gourmet meals you get in quarantine.
Right.
Alfred, grocery delivery.
Underrated.
George?
Underrated, but needs a lot more work and perfection. It's kind of interesting. If you look back, the web van model might actually be the right model of touchless, very automated. It's kind of funny. We kind of took a step back to something that's actually pretty analog and yet is an amazing convenience. So, my view.
Oh, this is a good one that just popped up. K-12 ed tech in the US. Alfred?
Underrated.
George?
Underrated for sure.
Virtual workouts. Alfred?
Overrated.
They're underrated. I actually have done a few of those. They're pretty fun.
I have to chime in. Totally underrated. I never thought I'd be doing them. I am big into them now. Anyways,
Peloton. What's your
I do several. I'm into rowing. So there's this amazing rowing startup where you can actually race people. I get on with, people in San Francisco, New York, Vancouver, Toronto. It's great. We race every Saturday, Sunday morning. So if you have a concept too, let me know too. So you can race with us.
Concept too, okay. Got it.
I want to fly through these podcasts, Alfred.
Underrated.
Underrated. I'm a massive fan. Love them.
Commuting, Alfred.
Overrated.
Way, way overrated from what we're seeing.
Urban living, Alfred.
Overrated.
Interesting. A jury's out, but probably overrated.
Tiger King. Don't tell me you haven't been watching.
Overrated for me.
I have tried my hardest to stay clear of that because I know I'll get sucked into it. So I have no view.
Okay, well then, what about The Last Dance, the Michael Jordan documentary?
Underrated.
Underrated.
And the man himself, underrated or overrated? Gotta ask.
Underrated.
George?
Underrated. Amazing.
Okay. TikTok, because I believe you both have teenage kids, Alfred.
Overrated.
Ooh, interesting.
Mm-hmm.
Interesting. Boy, based on the behavior set I witness and the amount of engagement and how it's spilling into other media channels, I think maybe underrated.
Interesting. Someone's on the same page as me. They had a question that I had too. SoftBank, Alfred.
Underrated.
George?
I have to go with, out of my inability to comment on company-specific matters, I have to go with unrated.
Unrated, all right. Okay, so let me ask this a different way. Profits, Alfred.
Profits definitely is underrated.
I would have to agree.
Okay, and I think this is the last one. I'll check the chat. Direct listings.
Overrated.
You know, I have a hard time answering that. I guess I would say underrated in the sense of capital markets innovation is a great thing. And new ways for companies to access capital that might be fitted for their needs so I'm all for capital markets innovation. So in that spirit, I think I have to say underrated.
And just to Alfred, you said overrated for direct listings, is that right?
Yeah, I think it's just totally based on the results that I've seen. I was hoping for when you have a direct listing, the participation would have been more fair and maybe even have a larger audience of participation. It turned out so far, I have not seen that, right? So the old-fashioned way still seems to be, having the bankers pushing the stock is still to be more efficient, and if you look at the listings that I was involved in, I think we still have work to do.
Okay, great. And then there was one more. So we'll make this the last one. Blockchain. Alfred, let's start with you.
Underrated.
Based on the journey we've been through with blockchain, I would say underrated. No, overrated. No, underrated. No, overrated. No.
I'm so glad you did that, George. I was going to say something no matter what you said.
I would say, look, I actually though agree. This was asked earlier, and I didn't really address it, but if we do go to a more distributed world, the idea of having a distributed trust mechanism in security paradigms and transactional paradigms, I think there's real opportunity there. So I would say in the long sweep of things, underrated.
Okay, great. Well, that is the last one. I want to thank you both. This was a great discussion. I got to say, it works pretty well over Zoom. I'm pleased. I may have to give Zoom happy hours another try.
Right.
But thank you both. Your insights were absolutely wonderful and I'm sure invaluable to our audience as so much is disrupted and we chart this sort of new path forward for startups and working from home and everything. And thank you to the audience for your questions, your very, very good questions and helping me out on that front. And I hope everyone has a great Memorial Day long weekend.
And I want to thank Deidre for hosting us and George being a great friend for this many years and through the thick and thin and coming on to the show also. Thank you guys very, very much. Appreciate it a lot. Yeah.
Thank you both. Great job, Deidre. And see you on the rowing machine.
Yeah.
Yes, I'll hold you to that. Bye, guys.
Bye-bye.